Everyone, and welcome back to another portfolio update video on the channel. Portfolio is currently sitting at $8,199.68. For the day, we are up $102.93 or 1.27%, and after hours up $15.36 or 0.19%. For the week, we are up once again, another huge week. This week we are up $191.73 or 2.39%. For the month, we are up $368.08 or 4.7%. For the 3 months, we are down $10.34 or 0.13%. And for the year to date, which is basically the all-time chart since May 31st when I started this account, we are up $199.68 or 2.5%. We are just about less than $50 away from a new all-time high in the portfolio. The highest this portfolio has ever been was on July 31st of this year, where we hit $249 in profit, and we're currently just less than $50 away from hitting a new all-time high in the account. And you can see this past, even just this past week has been crazy, but this past month or so, since the end of October, has been just insane. Just on a huge bull run in the portfolio, as you can see. And I know just every week it's been up and up and up, which is a really nice change to how it was between September and the end of October. Nothing but down, down, down. But let me tell you, there's so much we got to cover in this video. So much has happened this week. I made a ton of trades. And just so many great things have been happening lately, so I got to cover it for you guys. So yeah, make sure to stick around for that. But let's get straight into it. First of all, both of the puts we currently hold in this account that we sold, completely worthless. You can see they're worth a penny each. And if I go to total return here, you can see we're up $5 on the SOFI $6 put, expiring 12/8, so expiring this Friday. And then on the CVE put, which I opened in the last video, we're up $9, aka 90%. And this expires in 2 weeks. So looking amazing on our sold options here. Like I said, penny each, so these are completely worthless. Moving on down though, we have SPLG still building, still buying every single day. Like I said, I'm buying $10 a day of this, still doing that. We're now up to over 150 shares. So our equity currently in this is $8,000 or $8,150 total, and our total return, prepare yourself for this, it's crazy, is plus $505.26. Or 6.61%, which is crazy. So let's just click in here. Look at that, 54.08. And if you remember, I actually had sold a call option at the $54 strike, and we'll go over that in a minute. But you'll notice I no longer have that. I'll cover that in just a second. But first of all, we got to look at these gains here. So as you guys know, or you may not if you're a newer viewer, I've been dollar cost averaging into this ETF since the end, I believe, since right around here, since the beginning of August is when I started dollar cost averaging into this ETF. So I was buying around $70 a day of this ETF from right here all the way until we get to here. And basically the idea was I want my entire portfolio to be in the S&P 500 because it's basically just the best performing index, and it's always outperformed me. So my idea was, hey, maybe I should just go all in on this. If I can't beat it, I may as well join it, and just put everything into this and then use margin to sell cash secure puts so I can still sell options, still get some income, but also get the full growth of the S&P. Here we are, and you can see this plan has just been working phenomenally. Of course, it was good timing. I'm not going to give myself all the credit, but I am just very proud of finally having that realization and finally just biting the bullet and going into the S&P 500 entirely with my portfolio, dropping the individual companies, except for one, which I'll go over in a second. But yeah, I'm just very proud of where we are with this. I'm very happy with this, and you can see like we're up over $500 on just this position, which, like I said, I started this back in the end of July, and I want to say we can actually check that out in a second, but like I said, buying $70 a day, basically 1% of the portfolio was going into this fund every single day over the course of this past 3 months. And by the time I got everything into this ETF, which was around here when I had all my money in the ETF, what I was doing is I was saying, okay, what's a sustainable amount of money that I can contribute daily going forward? And I decided that that amount of money was $10. So since around here, I've been putting in $10 every single day, and it's continued to rally. So like I said, our market value is up to 8.2K, around there, with an over $500 total gain, or 6%, which is absolutely crazy. You can see my average cost is $50.73, which is way below the current price, and once again takes up my entire portfolio. So you can see it here. Here's that daily buy, currently at $10 every single day, and you can see here's our dollar cost averaging at work. You can see we have a very low cost basis on this, and then every now and then I'll buy some extra shares with some extra cash I have, which is why this basis is higher than this one, but the same idea applies. Still dollar cost averaging, getting us a very good cost basis. And like I said, let me quickly show you guys when I started. I originally started by using the SPY ETF before I discovered SPLG. So to find my actual first purchase, I'm gonna have to look here and go way back, and we can see if we can find it here. But if you're a long-time viewer, you will have remembered when I started doing this, and here you go. You can see it right here. Looks like we started buying it a little bit here and there around here. Here's a big market buy for around 600 bucks, and then you can see looks like we might have had our reoccurring investment here, but you can see reoccurring investment all the way back in August 14th, and even some of that before. You can see every single day 60, 70, 70, 70, 70. Day by day I was putting in tons of money into the S&P 500. Look at this. You can see all of these are reoccurring investments going, and then eventually I moved to SPLG around September because it was a lower price fund where I could sell options. So I just moved all my money over there, but you can still see this is what I've been doing for the past couple of months, and it's been working out amazing because of course we had this huge dip here, and that was from me trading individual companies, and that's when I really had that realization, like, hey, you know, I'm not good enough to really snipe individual companies like that, so we may as well just diversify into the S&P, and that's what I did, and here we are. So almost at a new all-time high in the portfolio. Not sure if we'll go higher. We'll have to see. I'm not going to make any moves based on how far we've come. I'm just going to keep letting it ride. As you can see, I have no open call options being sold currently, and I made a decision over the course of this past week that I will not be selling any calls on either of these holdings unless there's really a great opportunity, because there's really no reason to sell calls right now. Everything looks green, everything looks bullish currently, so why sell a call option and potentially forfeit some of your gains for a very low, you know, gain on the call option? That's kind of my thinking. So I unloaded the call options I had on SPLG and SOFI at a very good time. Came out pretty much unscathed on SOFI covered calls and was able to capture this full upside move we had this week, and then took a small loss in the SPLG call and was able to ride the rest of this wave up and make all of it back. So no worries there, but I'm not going to be opening any new calls unless I really see a good opportunity to do so. But let's jump into SOFI here. If you watched the last video, you remember I basically converted all of my SOFI options into shares based on my delta. You can see we have 105 shares currently. I also started a reoccurring buy. I believe I covered that in the last video, but I'm basically buying around 1 share per day of SOFI currently. And then if you watched the last video also, you'll know that this cost basis is actually incorrect. This is from me getting assigned early on a put credit spread, which kind of screwed up my cost basis, but I really bought 100 shares at 675, which is crazy considering where it's at now. And I can actually show that here real fast for you. Let's see, history. Let's see if I can find it. I really wish they added more filtering features here. It's kind of hard to find trades. Oh, we're all the way at the bottom for some reason. Whoops. Here it is. So on November 20th, we bought 100 shares at a price of $675, which obviously, as you can see, went through. And very good timing, of course, which is unlike me for individual stocks. But we bought it right around here, and it's had this ginormous run-up over the past week or two. You can see for the week it's up 15%, and then for the month from around where we bought it, it's just been ripping higher. So yeah, this past day also another 8% day on this company, which is crazy. And I've been able to capture pretty much all of this. I'll cover the call options in just a second. And we also opened that SOFI put, which I covered earlier in this video, but like I said, that's at full profit, so another $5 for us, which I opened, I believe, last week. But yeah, no, SOFI is looking very good, and they're set to announce GAAP profitability in Q4 earnings. So my thought process has always been, you know, once this company goes profitable, I think we're going to see a very high price. And as you guys know, I was holding those debit spreads. They were really good, a really good play, but I really didn't like how Robinhood was pricing the spreads. It would always price them incorrectly or with a really wide bid ask, which made it really hard to get in and out of trades, or also to actually price them correctly in your brokerage account. So I ended up, like I said, converting them to shares. That way I can also sell calls if I want to collect income. But it also lets me dollar cost average and have everything look a lot nicer just having it all in shares, because there's no theta decay like I would have on the spreads, and there's no expiration. I can hold these till the end of time, and it is what it is. But yeah, so looking very good though on this. Says we're up 75, but once again, 675 is the cost basis, so we're probably up around a little over $110 on these shares, which is incredible, an insane gain, and I just plan to keep holding this. Maybe sell a call option, because you can see that this week there is a call option available that I could sell at the $9 strike for actually a decent premium, around $3, which doesn't sound like a lot, but if I can collect $3, every week or so, that'll add up in the long run, especially considering the price of SOFI is just $7. We'll see. Theta Decay over the weekend might kill this contract off, but if it's still at 3, I may sell this in the coming week, because it will give us another 15% of gains if it were to keep ripping, which I doubt, but you never know. And it has a very low delta, so I could see this being a good option to sell for this coming week, but we'll see on that depending on how the price opens on Monday. But yeah, everything's looking good. Let's cover those call options real quick for you guys. We actually can go into the portfolio spreadsheet. As you can see, here are those 2 puts that we sold, just chilling at the top. But let's scroll down. We can also look at the past month, officially closed out in November, guys, for a pretty large overall P&L. We went up $500 in the month of November, and for December we're already up over 100, which is crazy. In terms of income, we were obviously negative for last month because once again, that's what I was saying, the whole covered call thing. You can see I was getting destroyed on covered calls all throughout that month because of the rally, and so that's why I think it really might not be a smart idea to sell covered calls unless there's really an opportunity. I think the problem with my mindset is I was just selling covered calls for the sake of selling covered calls. I think really there should be a reasoning behind selling the covered calls, not just collecting income. It should be that you think the stock price will actually go down or stay neutral. It shouldn't just be something you do every month. Hence why I closed out all my current covered calls, and why I plan to probably not open any covered calls soon unless it's on SOFI. Definitely not for SPLG. I don't know if I'll ever open another call option on this. We'll have to see. But definitely not on SPLG for now. But yeah, let's cover those call options. So we were able to exit the SOFI covered call, or sorry, the SPLG covered call that we originally opened for $10. We paid $40 back. So we ended up coming out with a net loss of $30 on that covered call. But then again, you saw our gains on the shares over $500. So that $30 is really a drop in the bucket. Especially considering that call option is now worth a lot more. I think it's in the 50s now, so I'm glad I got out of that and was able to capture that full gain to the upside. Then we have the SOFI covered call. This is the first one I sold. I originally sold it for $45 of credit, and I was able to close it for $47, so very tiny loss of just $2 on that call option. And of course, that was at the $7 strike, so you can imagine we would have missed out on an incredible amount of gains had I not closed this out. So I'm very glad I closed that out, and this was just way too aggressive of a play. Honestly, looking back on it, this was way too aggressive, especially if I want to hold the shares for the long term. I should not be selling at the money calls with 45 days out till expiration. That was just a terrible idea. So I'm glad we got out of that, like I said, basically unscathed. Next up, I actually sold a 750 covered call that was going to expire last Friday. Sold that for a credit of 3, and I had to buy it back at 10. So this call option tripled in value because SOFI just absolutely jumped. Let me pull up that chart again. So I closed that option out around here on Friday, I believe it was. Let me double check that actually. No, yeah, well actually Thursday. So I closed this option out on Thursday. So I closed it out at around 9:30 on Thursday, which was around here. I closed it out around here. Of course, SOFI ended up falling, so it was kind of, at the time I was a little bit annoyed. I was like, I shouldn't have closed that, but then I didn't end up opening any new calls. I was just going to leave it, let the shares ride, and of course I'm very glad I did that because as you can see, Friday ripped all the way up into the 780s. So that call option would have been deep underwater had I have held it. Both of them would be, so I'm very glad I closed both of these. And look, it was only for a very tiny loss of just $9. And if you include the SPLG loss, overall in the grand scheme of things, this isn't even 0.5% on the overall portfolio. So very small hit for a huge upside ultimately. So another good lesson learned, honestly, on covered calls. Be very conservative and careful, especially if you're really in it for the long term. There's really no reason to sell covered calls unless you really think the stock is not going to perform well. So you shouldn't just be opening these for the sake of opening these, and that's what I've kind of learned, and that's what I'm going to use going forward. But yeah, so overall, we also had that key option expire completely worthless. If you remember from the last video, this thing has been at 1 cent for a couple weeks now. The problem is I couldn't close it out unless I wanted to pay $5 because of the way the options trade on Key in 5-cent increments. I wasn't willing to give back $5, and I didn't need the cash anyways, so I just held it through expiration. So it expired completely worthless last Friday, so for 0. So we opened it for $20 of credit, and we got a debit of 0, meaning we came out with a $20 profit on this contract. And this is actually the first trade of December that we've essentially closed or had expire. So that's a great way to start out December with a nice 45 DTE key put that expired completely worthless for $20. Gives us a nice little starting income, as you can see down here, to go along with our nice P&L. And yeah, so things are looking up, guys. Things are looking very good. Much better than they were just a couple of weeks ago. I mean, seriously, like you can see just a couple weeks ago, things were looking pretty dismal. Down $636, and now we're all the way up $200. So crazy week. We'll see if this continues. I have no idea. Hopefully it does, of course, but who knows. And make sure to check out the portfolio update video for next week to see how the portfolio performs. And thank you for watching this video. Hope to see you in the next one. Goodbye.